Morning, champs. How do you get to the moon? Well, you've got to navigate through the stars. I actually cannot believe I'm saying this, but none of what you hear here is financial advice. It is for educational purposes only. Let's dive in. So, what happened yesterday on a higher time frame is that we just made a lower high, isn't that right? So that's what we've been trying to determine over all of this time. I know that I usually sound rather bearish on a high time frame, but that is exactly what happened. Does that mean, however, that we can't capture these nice little moves here on the long side? No, it doesn't. So I just wanted to give you that little bit of an update if you are new or if you don't have the experience yet. When I sound bearish on a high time frame, does not mean that you cannot get some really, really great moves. And I'll actually dive in and show you how to catch those moves early. What we do have here, however, is a continued lower low. And like I said to you yesterday, this Bollinger Band dropped sharply. And once again, we've got this huge wick right back down into the daily Bollinger Bands. So what I wanted to do now is just give you a view on the 4-hour time frame of some major support and resistances that you should be aware of. By the way, this path, as you can see, has created a 4-hour, let's get that on, 4-hour bullish market structure. What I've drawn out here is merely for conjecture. This still needs to play out, and obviously it could be completely incorrect, and we could just continue further up here. I'm going to, as I usually do, just give you some kind of indication of what you might expect throughout the day. So now that you can see that path, let's hide that. All right. Let's continue having a look. What do we have here? We've got our AVWAP, anchored VWAP, which has shown to be very, very good in terms of every single time we try to attack it. Are we going to get above it or not? If you go onto a lower time frame in the past, what happened here is we got above it, and as soon as we got below it, it acted as resistance. I also commented on that when it was happening. As soon as we got under it and it acted as resistance, yet again, we continued to sell off. Resistance over here. Same thing happened over here. Got up above it. We are now below it, and we need to continue watching to see whether or not it is going to form a resistance area. Now, let's have a look at some key SR levels. Going back to this earlier rise here, this is a key support resistance area. As you can see, it was support here, turned into resistance as soon as we came up to this level yesterday, resistance. So that is going to be a key area. This downsloping trend line, by the way, is connected to the previous highs. And that is another trend just to have a look at. As soon as we break above that, if we ever do actually attack that line, we will have broken a trend. So we haven't even touched that line yet. So as soon as we approach any of these SRs, we find major resistance. So at this point in time, we have claimed this as support. We are wedged into this little area over here, and we need to see what London session brings us. I'm going to dive further into that as we speak. Keep an eye out on what this area is. So this is actually the top of that channel that we've been tracking all this time. This channel looks something like this, right? Connected from that wick to that wick. So this is yesterday was merely a divergence. The only other divergences we've had out of the channel are those two. So essentially, like I've been saying, on a higher time frame, this is still pretty bearish. I mean, we do have a for our bullish market structure. Is this going to be our high before we start breaking down? We're going to have a look-see today. Okay, so let's see if there's anything else I wanted to show you. Just keep in mind, these are key levels that we need to track throughout today. Okay, these guys over here. Very, very quick look at our CVD. We constantly are making lower highs in the spot markets. No surprise. Only thing that's keeping us up here are these little spikes in the perp markets. And essentially, this is all market maker moves. I do speak a lot about market makers, and that is really because that's how we make our money. If we understand what the market makers are doing, we can follow them. So just bear in mind here what happened yesterday is there's a rise in this CVD, this perp CVD, and that is going to give us a further clue as to what I think is going to happen later on today or during the week. This chart I just wanted to show you is where I get the information of vector candles. Vector candles, like I have said in previous videos, are candles the volume compared to the last 10 candles is 200% or more of that volume, okay, on average. So the green vector candles are positive volume, and the red delta candles are a vector candle are negative delta. So essentially, why I like to draw them out is really speaking, they also correspond to fair value gaps, but they give you an indication of what market makers are doing and how these moves are formed. You also like to track the 50% mark of these candles as target areas. You see, a lot of the time, the 50% mark of these vector candles is where price revisits before moving in the opposite direction. So it's pretty similar to fair value gap or imbalances, uh, and this is how you can track market makers. What I wanted to show you again on this chart is that Monday's range has been formed right up here and down here. That's Monday's range. Here is Monday's mid. What I want you to have a look at is the following. Monday's mid is where we rejected off yesterday. Okay, so here, this candle over here, we have not quite recovered 50% of this vector candle, and that's why I brought this chart up. I want to let's get rid of that. I want to show you here that Asia's high is pretty much where we are right now. Asia's high is over there. What I believe may happen today as a possibility is that we are going to recover this vector candles 50% zone. We are going to clear out this liquidity over here for a further dump. Now, the reason why I say that is as follows. I've shown you that we have this aggregated CVD rise over here. If we have a look on Bybit, we'll have a look at what happened yesterday. This was a short squeeze. This whole rise up here. I'll show you the anatomy of the short squeeze and how it works so that you can identify it next time. This was where the shorts got flushed out. If you have a look, you'll see that that was 11 million down to approximately -5. So that in aggregate is 15 million. Okay, 15 million in shorts were flushed out. They have essentially been ranging around. They haven't really built up again. So what does that mean? In terms of the next move, you'll see here what happened is that these longs over here have, okay, fine. So there was some profit taking over here, but essentially, if you have a look at the delta here, we are at 0 and approximately 40, okay, at the peak. We're now at 34. The point that I'm getting at is that there's a huge amount of longs that are still in the market. And if you have a look here in terms of the open interest is nice and high, comparatively speaking, over the last few weeks. And that means market makers will have enough to uh, fuel their next move. What is their next move going to be? Well, it does seem like it's going to be to the downside. And as we continue building our higher time frame picture and our little clues as to the footsteps and footprints of the market makers, it seems to me like it's going to be to the downside. And these are the clues that we're starting to build up. So we know that there are still quite a few longs in the market. We know that high time frame market structure is still bearish. We also know that there are a whole lot of things happening in the market. For example, there's still a huge amount of regulatory FUD. Binance US seems to be in trouble. There's a lawsuit currently, and there's a whole lot of secrecy going on, except that on Friday, we know that the court files, the sealed court files that are obviously going to contain all sorts of FUD kind of information, are going to be unsealed. We do know that there are a huge amount of execs, Binance execs of the Binance US that have left the company and they are downsizing. It seems to be pretty fuddy. Of course, all of this is really just FUD. It does drive narrative, however. Narrative is the thing that you need to keep in mind so that you can figure out where the next moves are. So uh, let's move on. I want to show you the anatomy of what happened here, the anatomy of the squeeze. So this black area of the chart over here is the weekend. And as you can see, there was pretty flat price action during the weekend. But as I zoom in, I'm going to show you exactly what happened and the anatomy of the short squeeze and exactly how it happened. It's pretty unusual that the Asian session is what kicks it off. And that's what happened exactly over here. I did say yesterday I am expecting a move between Monday and Wednesday. Is it going to be Monday, Wednesday, or Monday, Tuesday, Wednesday? And obviously, it was yesterday. So let me show you on Trading Light. There was a request that there's more coverage on Trading Light, and let me therefore use it to show you exactly what happened here. This is that same weekend zone over here. Okay. What you can see usually on weekends is this very flat price action. But if you drill in to see exactly what is keeping the market exactly where it is you'll see these small little walls that are placed and then pulled again as soon as the market makers have gotten their little moves. You can see that they manufacture price action. They keep it flat. They wedge it in. Here's all sorts of stuff. If you can see, perhaps what I should do for you is just zoom in a little so you can see exactly what I'm talking about. How they manufacture price action. Here's where they kept it down. Here's where they bumped it up again. Here's where they bumped it up again, just so that they can quickly just bump it up again, bump it up again. Here it was getting a little bit too exuberant, so they try to keep it flat. Here again, there was this wall that they put over here, kept it up again, getting a little bit too exuberant, just bumped it down again, just bumped it down again. I think you can get the picture. So what they were actually doing is they were trapping people, trapping retail traders into positions such that they could use that liquidity to move the price in the direction that they wanted. Here again, they wanted to keep it down. I think you can get the picture here. They wanted to keep it up, but in this very, very tight little range, building the liquidity over the weekend. Then what happened here was quite interesting. Okay, let's just right. This was in the early hours here. This is the early hours of Monday. This is the Asian session start over here. What you can see happened was that a whole lot of liquidity, a whole lot of retail stops were building over here. Retail long stops were building. What the what the market makers eventually did was they pulled all of their walls over here. Okay, you can see it's pretty flat over in this area. What they then did, this spike here, was they collected their pay. That's essentially what they wanted to do. They cleared out all of these stops sitting over here. If you have a look at your vector candles, this was the candle in which market makers showed up in terms of really pushing the price up. That's where the short squeeze actually started. That's where the volume that no retail traders could come in with actually showed up into the market, and that is exactly why you can tell that this whole move was manufactured. This whole move here was manufactured. The damage was done essentially in this candle over here, which started the short squeeze, and the rest is history, as you know. Exactly what happened yesterday. We got this fairly controlled squeeze, as you can see. You got these little walls here and there, while market makers continue to collect more and more as they push the price up. So that is exactly what happened. That's the anatomy. And if you can spot this earlier, then you can profit from it. Now, I just want to also show you some stuff here. Let us zoom out. Why do I believe that the next move is down? So there was a huge amount of liquidity over here that you can see has been cleared out. There's a little bit of a void over here. There's the small little bit of liquidity over here. When I say small, you can literally just see it by the color. So if I do zoom in, or if I literally just rest my cursor over this, you're going to see 381 BTC. This, by the way, is the Binance, just on Binance. The reason why I use this is because obviously it's got the biggest volume. This is not aggregated. The reason why I have been showing you the little liquidity pools of my trading light charts as I do before I got the request to cover more trading light content is because that is aggregated. So that is across all exchanges, and those liquidity pools are the highest areas of aggregated liquidity across all exchanges. So, but anyway, this does give you a very, very good idea of what is going on, and that's why I have this trading light chart as I do. What you can see here, this is where market makers want to just bump price up a little bit further, and I think that the move is going to pretty much collect some of the liquidity over here before slamming price down again to collect all of this liquidity over here. Ever heard of if one then two theory? If not, it's simply that comes from Igor Teixeira. He is a fantastic trader, and essentially his theory, as he spotted this, and he sees essentially that once liquidity in this zone is collected, obviously market makers are going to come and collect this liquidity, and so it goes, etc. So if this is, whoops, sorry, let's try this. If this is 1, then this is 2, and vice versa. If the move first came down into this zone, this would be 1, and this would be 2. So that's what if 1 then 2 means. So following all of these little clues that I'm starting to thread together for you, essentially what it looks like is that we have the liquidity on the top of this wick over here, building in this area. We have more long side liquidity that is in the market that still hasn't been flushed out yet. I showed you that on the EXO chart. And what I believe is going to take place is a further probability or a higher probability of us flushing to the downside. Of course, anything can happen throughout the day. Right, this is our shorter time frame chart. Okay, we're on the 1 hour. Now, the reason I have put this line over here, as you can see, that we still haven't quite recovered it yet. I mean, nothing is going to be absolutely picture perfect. So that's our 50% vector candle over there. I'll actually leave it on here. What I have marked out for you is the sell imbalance that were formed on the way down. Here's another set over here. And this order block I need to let you know is not the best. It's not the most picture perfect per se, and it's also relatively weak. If you drill down and have a look at the volume created in this zone over here compared to the rest of the candles around it, I'm not going to show you because I don't have time in this video. What I'm also trying to do, by the way, is just keep the length of these videos down. So I need to try to get through as much info as possible. So what are the scenarios that we have in front of us today? Essentially, like I said, collect some of this liquidity over here. We do have this resistance zone over here. If we see weak pushes, these sell imbalances really work well as resistance and or support. Also, you do get the reverse of this, which is a buy imbalance. Pretty similar. Here's a buy imbalance. Okay. So we are, again, like I said, just ranging in this zone. All that we had here was a little deviation, nothing to get excited about. And the bulls have not taken control. This was literally a manufactured move up, a little squeeze, market maker play. So essentially, here's what we need to have a look at. Don't forget, on our high time frame chart, we have our anchored VWAP coming in at around this area, which is as yet unclaimed resistance. We are simply here at the top of our channel. Okay, so at this point, still fighting that, still struggling that. If we start seeing this, if we have a spike up and we start seeing this lower time frame market structure breaking down like this, then really I think the game is on and you can expect rotation to the downside. You also have this upsloping trend line. If you see price action doing something like this and you see this becoming resistance, then you also have a further indication that we're going to have a rotation to the downside to collect this liquidity as we see. We also have this fair value gap. Don't forget, this is an unrecovered vector candle, and as I said yesterday, that is essentially where I see price going to long term. When I say long term, let's call it medium term. All right, champs, let's just, what I'm going to do here is move this to the side over here so that if you do not have the footprint software, you can get your levels. Here's your order block. Like I say, it's not the best order block here. Your levels, mark out all of your various zones here. And with that, I am going to bid you farewell. I'm going to be a lot more active today in Discord. I do apologize. Yesterday, I was extremely tired. Had a very, very long day. I was up at 2 a.m. and was in shul most of the day. So today will be quite a bit better, and I will guide you through the rest of the day in Discord. Thank you very, very much. Have a fantastic day with the odds ever being in your favor.